Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Thursday, 9th day of February 2017, and this is the Daily Report for Gold and Silver. Following 5 consecutive days of higher pricing in gold, that abruptly ended today with sharply, or moderately I should say, lower pricing in the precious metals market, specifically gold and silver. Platinum and palladium actually had a nice showing on the day, but gold currently is trading off about $7.50. This, of course, being most active April, currently trading at $12.32. It has traded to a low today of $12.3150. So as you can see, we are trading just near the low on the day with a high of $12.46. Both the high and the low are interesting, and it's something that we'll talk about immediately as we pull up our first gold chart. As far as silver goes, that is trading lower today, off about 0.25% at 1766. with a low of 1761 and a high of 1784. Lastly, I do want to take a look at spot gold because that has been trading under substantially more pressure than futures, off about $10.50 at $12.30.81. Of course, we currently have long positions in gold, and the question that we must ask ourselves, is it time to pull profit? And that will be the focus of today's daily report on the gold forecast. So traders, as I mentioned in my opening letter, in terms of the current rally in gold, I absolutely believe that long-term it is very much still intact. Short-term, however, I am beginning to put into question as it has hit certain benchmarks that we were looking for, and once hitting those benchmarks, actually sold lower. And we talked about the fact that this rally didn't start overnight. This rally has been firmly in place now since the middle of December. First bullish leg of that rally moved gold up roughly about $100 from $11.20 to $12.20. At that point, we saw a subsequent correction, very shallow correction, I might add, of approximately 38%. And then we went into this second leg of this rally. Now, if this is to be labeled as somewhat of a wave 1, this being a wave 2, we know that wave 3 cannot be the shortest of any of the impulse waves. So therefore, based on our Elliott wave model, this wave absolutely has further to go, and I'm looking at a conclusion of this particular wave at this point up at around 1280. However, as I have said on multiple occasions and numerous times, I would not be surprised for this particular rally to have some legs in it, possibly moving up to the 61% extension of wave 1 and then trading lower from there before finding support at some area and then moving to higher ground. If that is the case, then what we're looking at is potentially the beginning of that corrective action. So for that reason, I am putting out the following trade recommendation. For traders trading multiple contracts of gold right now and are long multiple contracts, my recommendation is to lighten and pull profits and at least half of those positions, and you can leave the other half with a stop in place just below 1220. For traders trading single contracts of gold, my recommendation is that you should probably go ahead and pull profits, pull them at the market as it reopens. In other news, there is no doubt the big item today is the fact that we have had a tremendous surge in U.S. equities, and we have a stronger dollar. Of course, a stronger dollar contributing about 50% to today's sell-off in gold pricing, but we are closing in the Dow as well as the S&P and the NASDAQ at new all-time record highs. Dow at 20,172.40, putting it up about 118 points on the day, 0.6% in terms of the rise. It had traded to a low of 61 and the high 20,206. Incredible showing for the marketplace today. NASDAQ also trading higher, up about 0.4% when we look at the NASDAQ 100 E-mini. That is at 52.11 and change. Absolutely a new record high. And then when we look at the Standard & Poor's, let's just pull up our cash market. That's at 2308, up 14 points today. Again, a rise of about 0.6%, and again, a new record high. We are again witnessing history with these indices moving to new record highs. This is a daily chart of the Dow Jones Industrial Average. We can see our former high close being right here. We had a higher close than previously, and today certainly was a surge above that price point, trading to a new all-time high and a new all-time intraday high, 20,206. We are going to begin to plot where I think this market could go to as data comes out, but I can tell you this: if Trump is true to his word and we see some real tax relief policies begin to emerge, we could see a continuation and a move in this rally that over time could take U.S. equities roughly 5, maybe even as high as 10% higher. That would put the Dow at 22,000, and that would be a sizable move. What time parameter do I believe we could see that in? Well, that would be about a year to a year and a half. Probably no other indice has seen such a dramatic rise recently as the tech-heavy NASDAQ index, which again has surged to a new record high. This being a daily chart, and we've hit a new record high 1, 2, 3, call it the last 3 days in a row. Here we had a defined top in the market that really ended at the beginning of this week, and it certainly seems as though we will finish this week on an extremely strong note. And traders, just as in the NASDAQ and the Dow, you can see that the S&P has broken above this former level of resistance, S&P 500, this being cash with those highs at about 23, closing at 2307. You can see these tops here, and we certainly have taken those tops out, those highs out, I should say. And of course, recent gains, when we look at a weekly chart, are even more impressive than what we have seen recently, because now for the last 3 weeks, we have seen this market close at or above the former high. While on the surface, today's lower pricing in gold could signal an end to the rally that we have witnessed that really began or mid-December of last year and has carried up till the present. As I spoke about in my opening letter, my sense is that short term we might be looking at some consolidation in the market. We might in fact see gold prices move lower from here, but the bigger picture or long-term view, I believe, is still solidly bullish. How deep will this correction be? Will this be a flash in the pan and subside today or tomorrow? Or will it extend to a period of time of a week or so? That is something we can't answer until more data comes in and we see how prices react over the next couple of days. But as I spoke about in our first chart observations in gold, it is never, ever wrong to take a profit. So for traders that have multiple positions in gold right now, I recommend that you pull profits on at least half. For traders that are trading single contracts, you are never wrong taking a profit, and I advise that you seriously consider moving your stop to the market and taking profits. Use your own judgment and the benchmarks that we spoke about to guide your decision. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.